Hi, welcome to the first Financial Basics with SISIP course at the MFRC in Toronto. Tonight we have Martin Corrett with us from SISIP to give us the basics of budgeting. And he's going to talk a little bit about what that might look like for military families and specific to the Greater Toronto Area. I'm Kathleen Cormie, the Family Navigator at the Toronto MFRC, and welcome to the workshop tonight. Thank you so much for being with us tonight, Martin.
Thank you. My pleasure to be here. Welcome everyone this evening for Financial Basics. I'm going to give you a little background about myself. So I've been with SISIP, 11 months now, so almost that first year. Before working with SISIP, I worked as a financial counselor for a nonprofit organization for 7 years. And prior to that, spent about 17 years in the banking industry. So I got myself a good base there. So today we're going to talk primarily about budgeting and saving. So some of the things we're going to learn today, we're going to talk about how to manage spending, how to prepare a realistic budget. We're going to talk about tips on how to save money as well along the way. Some of the benefits of this is taking control of our financial future, achieving our life goals, providing for yourself, your family, being a smarter consumer, and reducing stress. Financial stress is a big one for a lot of people. Sleepless night is just one effect, can create problems in relationships and all kinds of other issues. So when it comes to personal finance, it's really important to look at it and take it head on. Ignoring it is never a good option. So we'll start with a few quiz questions and I'll get people to answer in the chat. So current average percentage of their income that Canadians save, would you say A, B, or C? The answer's here. Let's see what people think. Oh, everyone's going A, 5%. You are correct. Most financial books would tell us we should save about 20% of our income. In today's world, not necessarily realistic or a lot harder for most people. So 10% right now is a pretty good gauge number. If you can do 10%, you're above national average, and it certainly is a good place to start. The percentage of Canadian households that use a budget to manage their finance, you say A, B, or C. So 32%, 46. Some A's, B's. A little more spread on this one. Answer is 46%. So again, good number there, not bad. But the question is, are they working with that budget properly? And we'll talk about that because a lot of people that I've met with throughout this career, yes, I have a budget, when in reality, I realize they have 50% of a budget. So today we'll figure out what a full budget is. The best way to plan for unexpected expenses is A, buy a lottery ticket every week, B, only have friends who will lend us money, or C, set money aside for emergency savings funds. I think that's an easy one, but we got have a little bit of fun along the way. Friends that lend money is always nice to have too, but that can create other kind of problems. All right, so now we'll jump into budgeting itself. So a little did you know fact, 93% of Canadians who have a budget stick to it. So what that says is basically if we work with a budget and we work with it properly, in general, it's a tool that people do find very, very useful, so they continue to do it. When it comes to budgeting, it's something really that we should do our entire life. There's no real stopping to budgeting, although we can get to a point where we pretty much know it by heart, but it's always a good idea to continue. So when it comes to a budget, fairly simple. Most of you probably already know this. So there's two parts. There's our income and expenses are the two major part of a budget. So when we talk about income, we only talk about regular monthly income. So it could be from any source, so work, self-employment, could be pensions, investments if you're getting monthly returns. So anything you get on a monthly basis. So things like some people, if you get HST returns, tax returns, any type of quarterly payout is not part of your budget because that money is not regular. That is what we consider extra money. And we'll talk about extra money, what we can do with that type of money when that comes in. So always for your base is always your regular monthly income that's coming in.
And I might add there, Martin, that for military members that spec pay is an important consideration that way too. Often people, something like like dive pay is something that you only get when you're actively diving or in that role. So any sort of special pay or like sea pay, those types of things. I'm coming obviously from a Navy perspective. But yeah, any sort of specialty pay that you're not guaranteed to get as your base salary is something that you don't want to have as your base budget either, right?
Exactly, because at that point, that's an extra, and might be for a period of time, but then we also know that that might go away. So we need to be careful when planning expenses during those periods when we're getting the higher pay. Then when we look at expenses, as we all know, there's two types of expenses. So fixed, so again, same thing every month, things like rent, mortgages, insurances, loan payments. Most people are always very good at knowing their fixed expenses because they tend to be the larger amounts often, or because they are repetitive. Again, we just know what those are. And then we have our variable expenses, so fuel expense, groceries, utilities, depending on how you're set up with your company, can be variable. Cell phone can be either fixed or variable, again, depending on the individual. But definitely when we look at variable expenses, we know that things can vary a little bit from month to month. But the nice thing is when we budget, we can create patterns in our spending and we start seeing some of those things, and it takes some of the variables a little bit out of the way. So average monthly expenses for fixed types. Again, these are national averages for Canada, and we'll touch on the Toronto area. This is, again, just to give you an average idea of what those types of expenses are. When we look at variable expenses, again, very similar. These are national averages. So some of these for the Toronto area are pretty low. So if we look at more specific to the Toronto area, for example, average rent as of 2021, but again, these are statistic numbers that came from the area as far as cost of housing. But then when you start looking at, places like GG for rentals and such, and a lot of these prices are going up. So definitely the Toronto area, when it comes to housing, is definitely more expensive than a lot of places in the country. Definitely housing is at a premium. Oops. Childcare is another big expense for anyone with kids. So again, depending on ages and requirements. So this, looking at full-time care for kids. So this is per child. So if we kind of do some averages, you're looking at about $1,100 a month for childcare for one child. Again, depending on the age bracket, this is just an average. So it definitely can be more than that. And then if we look at part-time childcare, so really looking at just pre and after school type of service, again, per child, using both mornings and afternoons, you're looking at about $782 a month as a base. So two very big expenses: housing in the Toronto area, childcare. There are a few other differences, but those are probably the biggest ones. An area that a lot of people underestimate is also the cost of food. In this region here, rural, $250 to $300 a month is reasonable. Toronto area, I would say $300 to $400 per adult is reasonable. Again, if you eat healthy, if you've got any type of food restrictions, then you're definitely in closer to the $400 because things do get expensive. So if you've never created a budget, the first budget you're going to create is what we call the cost of living budget. So what that is basically is everything you absolutely need to pay for, things like rent, utilities, insurances, so things you need on a monthly basis. Things like paying down debt, creating saving goals, maybe things like planning family trips, that'll come afterwards. Because first we need to make sure that your cost of living budget works. Once we know that that budget works, then we can start adding more expenses.
Video, not video tonight, audio.
So, you're on mute.
So welcome to the presentation. I see we've got one other participant that just joined us. If you don't mind just muting your mic unless you're ready to ask a question, and then you can feel free to ask a question in the chat or unmute and ask a question. Thank you so much and welcome.
So when it comes to budgeting, knowing on our income is the easy part. Most people know typically what they make. Uh, the expenses of what those really are, again, fixed expenses, the regular payments, most people are really good at knowing. But then when we fall into fuel expense, miscellaneous, eating out, groceries, it's a bit of a guess. And unfortunately, the perception and reality often doesn't always match. So when we talk about budgeting, that first piece of here's my income and here's all my expenses, or at least what I think they are, that's what I call 50% of a budget. But that's what a lot of people say, well, yes, I have a budget. Here it is. It works. Problem is we don't know if that's reality. So this is the know what you spend that comes very, very important. That's the tracking piece. It's knowing what exactly we spend and where. In this day and age, there's a lot of different ways to do our tracking. Obviously, keeping receipts is a classic way of doing it. We can write things down. Most of us have cell phones. We can create notes. A lot of people use debit card a lot. So again, we can always go back to our bank account to see what we've spent where. Problem with that method is we have a total and we have a store. So you went to Walmart, you spent $103. What was it? Was it grocery? Was it all grocery? Was it a mix of things? So those are the type of things we've got to be careful, especially under the grocery area, because we were just talking food is expensive. But a lot of stores nowadays, you can walk out with a TV and clothes. So that can make our grocery amount look a lot higher than it really is. So again, when you do those types of purchases, if there's extras, you got to make sure to try to separate those. When it comes to variable expenses and such, the tracking, for most people, there's not a lot because most of our expenses are fixed. So once a month, for the average family, then you've got maybe another 4 or 5 items to track on a regular basis because the rest is really just once a month. But it's really about finding a method that works for you as far as tracking the funds. A lot of banks nowadays offer tracking systems. Basically, when you use your debit, so it'll show you your spending and it puts it in categories, fuel, groceries, and such. Again, the problem with those apps, it does give you an idea, but it doesn't know that, if you classify Walmart as grocery, no matter what you buy at Walmart, they will say, okay, well, it's groceries. So it can be a little bit off. So you have to be careful with that. And I find I've tried a few different ones. Again, I can't recommend things to people if I don't know how they work. I find that at first they're not very accurate. You have to work with those apps to give categories for the purchases. So the more you work with the app, the better it gets. But again, it won't be able to say, well, the 150 at Walmart, 100 was groceries and 50 was other. So that just falls on you to know at that point. Excuse me. So again, it's just finding a method that works for you to track your spending. So once we have our income, we have our expenses, we do the difference. We want to be in a surplus situation. So that means there's money left over after everything's paid for. So now we can start planning as far as savings, planning trips, investments, paying down debt, those types of things. If we're in a deficit, unfortunately, that's always the hardest part. Increasing the income tends to be the hardest part of the two. So then we need to start looking at expenses to see if there's any way to make that budget work. So all of this sounds really good, but what does that look like? So here's a very simple budget example. And I have tools at the end that I can share with people as well to help with that. So right now, someone in Ontario working minimum wage, 40 hours a week would earn roughly $17.92 a month. Say they're renting a room, we got some groceries, fuel expense, car insurance, and then miscellaneous. Again, miscellaneous is everything that is not in your budget. So it could be coffees, it could be restaurant. So it depends on how you build your budget. Again, this one I kept very, very simple, but it shows the principle behind it. So we're saying that total expenses for the month is $1,320. So in theory, we should have an extra $472 a month. Great place to be in, can do some savings. There's no debt in this case, but if there was, we could work on paying it down. So now comes our tracking piece, verifying what reality tells us. The old way was we keep receipts or write things down all month long, and then at the end of the month, we kind of add everything up to see what we spent. It takes an hour or two to do, because at that point, we've got a month's worth of information. Much better way to do this is to do our tracking once a week. If we do our tracking of actuals weekly, on average, 5-10 minutes, you're done. A lot quicker. It's easier to remember what the money was spent on because it's fresh within the last week. So it makes the process easier. And when our budget is tight, it becomes that much more important because now we can see the spending as the weeks go by. So if we need to be careful, then we know in advance. Versus the old method, we get the information month end, post month. So now we know we overspent and it's too late because it's already done. So this way it helps us prevent overspending. So in this case, if we go first week, wasn't a pay week, they paid their rent, got some groceries, some fuel, insurance wasn't due, and spent some of their miscellaneous money. Fairly simple. Week 2, same thing they do as far as their expenses. So that was a pay week. Week 3, we continue. So right away, right now, by week 3 of the month, it looks like they're going to overspend on groceries, but might have overestimated on the fuel expense. Again, because there's a lot of surplus, this is not a concern, but if there was no surplus, this is where this becomes important. And again, a budget is not about saying, well, okay, this is it for groceries, I can't spend more. No, it's an entire pool of money, so you can move things around. It's about discovering what reality tells us. So because I'm underspending on my fuel expense, I'm not concerned. Yes, I'm going to spend more on groceries, but I've got room in this case. So by the end of the month, as expected, I can see that I spent more on groceries, but I also spent less than estimated on fuel. So in the end, overall budget, I only overspent by $5. Not a big deal. But if that $5 doesn't exist, and sometimes for some people that's the case, this is where this becomes important, because at the end of week 3, now you really got a plan. Well, okay, gonna have to do a smaller grocery, or maybe I'm not, taking that car ride because I don't have the extra. So, and that's one of the benefits of doing it this way. So I always say, Sunday morning over coffee, great time to do your budget, 5-10 minutes and you're done. So in this case, for example, the only thing this person would need to track is grocery, fuel, and miscellaneous. So that's 3 things that you need to track. The rest, once a month, once it's paid, you can forget about it. But this is a simple example, and I have a tool that I can share with everyone after the presentation that can help with that type of tracking. So any questions on the budget piece? I think that one's fairly straightforward. I'll just pause real quick if there's anything in the chat. If not, we'll move on to managing our cost of living, being a smarter consumers, and tips on saving money, which is always a great thing.
Don't have anything in the chat, Martin. You can go ahead.
So 44% of Canadians are living paycheck to paycheck. And I honestly think that number is low. I think that's the case for a lot more people. We don't always just realize it or admit to it. And it is fairly common. And that's where, again, budgeting and tracking our expenses come into play. So we're going to talk about areas such as checking our bills, negotiating better plans, little things like packing a lunch, and then looking at bigger purchases like a home and a car.
There is a question now in the chat.
Yeah, I mean, how should I want to hear? Okay, so large, yeah, insurance, if you're paying full year, a very good question. So typically the suggestion for anything like that comes back once a year. So if you know how much your insurance is for the year, you've just paid it. So in theory, next year is going to be in theory the same amount. Divide by 12, start putting that money aside every month. And that's where you put that in a savings account. So then you know that when next year's insurance bill comes in, the money's put away to cover that expense, especially if you're not creating any savings already. Again, it's just creating a savings account where you can put that kind of money. And that's also a point where people often don't realize that you can have multiple savings accounts And a lot of banks typically will not charge you to have multiple savings accounts, so it doesn't cost you anything. So you can have a savings account, which is, family trip. So now you're saving, you're putting an amount there because when you get to a certain amount, you might decide, okay, well, that's covered. Now I can maybe put money somewhere else. You could have one for, yearly expenses like insurance, certificates, or anything that you have to pay like that once a year. Again, once you know how much you need in 12 months, then you know how much to put in there every month. So it's the best way to do it is to always separate those savings. If we leave money in our checking account, it has a tendency to disappear, especially if we're not tracking. So first one here, checking our bills. There we go. It sounds rather simple, but a lot of people don't check their bills. And there's a lot of information on any statement we receive. What do we owe? What did we purchase? Or what are we being billed for? When is it due? Do I have to pay in full? And so on. And when's it due by? Especially when we get any type of new service. So we're talking cell phone, internet, TV, you name it. There's always, these great promotions and you're expecting a price of X and then your bill comes in and it's completely different. Fairly common for a lot of people. So again, if we notice these things right away, then it's unfortunately calling the company and getting it fixed. But if we wait too long, they're not going to go back 2 or 3 months back to make those corrections. So again, very important to check those bills to make sure there's no mistakes, because mistakes happens all the time. Negotiating better plans. Again, like we're saying, we all have some sort of service, be internet, TV, cell phone. When we sign up for these products, usually we end up getting more than we want because it makes sense. They're offering us so much more for a cheaper price, so we go for it. Usually 12 months later, though, our bill gets really expensive. So at which point, there's a couple of options. One, you can call the company, which is not pleasant to do. It's an hour on the phone, but there's always a new promotion available, which means, again, you can get that bill hopefully reduced. Or you can also look at all the services that you took just because, it was cheap 12 months ago, but you don't really want them anyway. So canceling maybe some of those additional services, again, to bring the cost down. And when it comes to services, especially internet, TV, and cell phones, those services should be reviewed at least once a year because our needs change along the way. What you need today and what you needed a year ago might not be the same thing. So maybe you were traveling or you were out of country and you needed an international plan on your cell phone. That made sense. But now you're back and we kind of forget that we have those things that we're paying for, but you don't need it anymore. So again, reviewing all of our services, making sure that we still pay for what we actually need today, not what we needed a year ago, can be an opportunity to save us money. So again, it's talking to these people, seeing what they have to offer, especially when it comes to things like cell phone and internet. There's been so much more competition now when it comes to that. Everyone's used to, the big names. So you've got, the Rogers, the Bils, the Cogeco's, the Shaws, but there's a lot of very smaller companies that they're called resellers. So they are selling basically the product from the big guy under their own name. And they often tend to have much better pricing. So especially when it comes to internet, that's a big one there where you can get much better pricing. A lot of the big companies for a while, although now they're starting again, wouldn't even offer unlimited internet, but yet these little companies would for a cheaper price than the big guys. So again, it comes down to seeing what's available in your area. Like I say, most of them I've had good experience with, the ones I've always worked with personally, and it saves you a ton of money. I'm very good at giving personal examples when it comes to this type of stuff. I was with the big company, internet costing me, $100 a month. I switched to one of those resellers, which basically is the exact same service that I had, except now I pay it to a different company, and now I pay $51 a month. So it's the exact same service. So again, it's just seeing what's available. Cell phone, some of those smaller cell phone companies as well have some of those same cheaper type bundles for cell phones. So depending on where you live, usually in most big city centers, those smaller cell phone companies work great, no issue. If you're rural, out in the country, that's where it gets a little bit more tricky sometimes. But it's seeing what's out there, seeing what's available.
Mhm.
Banking costs is another one, again, depending on where you're banking. So as CAF members, if you're with Bank of Montreal, no fee banking, fantastic. There's alternative nowadays with no fee banking with what we call virtual banks, so the Simplies of the world or Tangerine, for example. And some people like to stick with the traditional banks. Average monthly fee for the for standard banks is, well, we'll call it $16 a month. So that's the fee that for most banks will get you unlimited use for your debit card, which is really what you're paying for. Usually gives you a few additional services, but in reality, we pay that fee because we want an unlimited debit card. But some people don't use debit that much. There are still people that work with cash. So if you're one of those individuals, then paying for unlimited debit probably doesn't make sense. So then it comes down to what is your habit? What do you need? Same way there's a lot of banks will offer, reduced fee or a discount if you keep minimum $1,000 in your checking account. Okay, well, if you're an individual that you always keep at least that much, that might be a good setup for you. So again, it's talking to your bank. If you're paying fees with them, what am I paying for? What else do you have package-wise? There's ways to save money? Because we all know changing banks is not easy, but it's also an option to move to a bank that charge you no fees if you're comfortable with that. A big one too is students. So there's student discounts when it comes to banking, but people all think that student has to do with age. Well, no, it doesn't. If you are registered in a school, if you're taking a course and you have a student ID, you are a student. You can get student pricing with your bank. So student has nothing to do with age. So a lot of people go, oh, really? They don't realize that. So absolutely. Quick banking tool here, Financial Consumer Agency of Canada, FCAC for short. They are the federal branch that manages all the banks here in Canada. Their website is filled with really good information. There's banking tools, there's budget sheets, there's all kinds of credit card payoff calculators. It's really well done. There's a lot of really good information. So you Google FCAC and it'll come right up. And there's personal retirement planning. You can compare just about every bank in Canada. What are their fees? What kind of interest do they pay on their savings account and things like that. So it's a really useful tool just to kind of get an idea. And when you have financial questions, so I would say first call us. That's what we're here for. But this is definitely a resource that's available. Their budget sheets are pretty amazing, but unfortunately, they're almost too complicated. They do graphics and all kinds of things, which looks really nice, but is sometimes overwhelming to people. And when we talk about a budget, it's not about how pretty it looks, it's about the information. That's what's important. So yes, theirs is really good. I really like it because it's really got all kinds of, add-on tools to it, but it's almost too much for the average individual. Phone costs, landline versus cell phone. I think in this day and age, a lot of people don't have landlines anymore. I don't think I've had a landline for probably 15 years now. Again, people just don't use them that much. With the cell phone, you just don't necessarily need it. Which is also when you sign up for internet or TV service, most big companies offer you a landline for free, to try to get you on that landline. So it's normally free for the first year, and then after that, at least $25 a month type of thing. So again, if you really don't want that landline, just cancel it afterwards. But when it comes to cell phone, the cost of those can vary quite a bit. So average cell phone bill for someone on a plan with data and unlimited text and so on, you're about $80 a month on average for a cell phone. Again, they keep playing around with the bundles and stuff. So now the big thing for the last few years is the whole family thing. So everyone's under one account and you share all the data and such. So again, it does take some research to figure out what is your need, as far as that product goes, to make sure that you get what fulfills your need and not what these companies are trying to sell us. So finding the right provider and the right program. Long distance, again, in this day and age, most cell phone companies is Canada wide. So we don't need long distance plan anymore. It used to be only after 5 o'clock and on weekends. Now it's pretty much all the time for everyone. So they keep modifying these packages, which is again a good reason why, well, great, I got, Canada wide free calling on my cell phone, but I've had a long distance plan on that cell phone for 5 years that, because I never review it. So I'm paying for something I don't need. And it's guaranteed that that company is not going to tell you that. So again, it's the reviewing. Again, bundling service used to be very popular as well. So that's when you had multiple service through one company. So TV, internet, phone. Those offers are still out there. But because you can get certain products like cell phone and internet sometimes so much cheaper somewhere else, that bundling doesn't make sense anymore. So again, it takes a little bit of time to do this research to figure out, what's the best deal for you based on your need, but you're just investing time in yourself to making sure that you're finding the right product for you. And that's really the key, is making sure, because there's never a global answer for these things because everyone is an individual. So it's about meeting your own need, and what you define as your need and somebody else does is very different. So it's always about looking at ourselves. So we were just talking about bundling. So the typical discounts you'd get for multiple products would be up to 15% discount. So on the average, very basic bundle here, $20 savings a month on a bill of 130. All right, it's great, but I think in this day and age, like I say, you can usually get a lot better deals by kind of shopping around. I keep seeing a lot less people paying for cable, for example, in this day and age. Now everybody streams everything, so all you need is a good internet, right? So there's a lot of things that have been changing over, I'd say, the last 5 to 10 years, really, especially with technology, which really changes the way we spend as well. Saving on food. So like we said, food is expensive. Eating out is even more expensive. So in Toronto area, we're saying, easily $300 a month per adult. Eating out, that doesn't go very far. So little things like eating breakfast at home, again, can save you, bringing a lunch, drinks and snacks, coffee. I'm a Timmy's guy, absolutely. Have been for years. I used to do it, 2-3 times a day, and sometimes a muffin. It's only $2, maybe $5 maximum each trip, right? It's not a lot of money. And again, the perception is it's not a lot of money. So then, decided to track my spending at Tim Hortons to figure out that, I'm spending about $300 a month at Tim Hortons. And, that's a shock.
When I was in college, I worked at Starbucks, and our Starbucks was in the bottom of a government building. People would come down twice a day for a latte or latte and a muffin. And working for, just over minimum wage, I thought, oh my goodness, this would be like half of my paycheck, what these people are spending just on coffee. It's a really—
one Starbucks equals 2 Timmys.
Yeah, but Timmy's can still add up too. And
but it does.
It's interesting, in the last year and a half, I think that's one of those areas where I think a lot of people have had a reality check of like, oh, if I can't go out, look at how my savings is improving. Yeah. I know, like, for my dad, super social guy, always out at coffee shops. And all of a sudden he's like, I've got all this expendable income because I've got to bring my coffee now to work.
Yeah. And again, those are those little things where that perception often is off. Now, could I afford $300 a month at Timmy's? Sure. But to me, I thought that was ridiculous. I wanted to do something better with that money. So I decided, okay, $100 a month is my limit for Timmy's, which for me works. So now I just freed up $200 a month for something else. So that's the power of tracking, of finding these things out. And that little purchase, that Timmy's thing is huge for a lot of people.
And I think that you touch on a great point there, that it's about what you want to do with your money, right? So if going out for coffee with your friend or, a colleague at lunchtime every day is something that's valuable to you for your socializing, for whatever, that's okay. But if you're aware that that's where you're spending your money, if that's your priority, good on you, that works, right? But you just might, like you said, want to look at that and say like, okay, well, maybe I've got another priority somewhere else. I want to put some of this. So the awareness, I think, is really big and
It
empowering.
is. And to your point, and we're actually going to talk about that in a slide or two here, but that, it's important to me, and my Timmy's was important to me because I really enjoy it, but it wasn't $300 important to me,
Yeah.
right? So it's like, okay, I need to readjust because yes, and I still go once a day, pretty much 7 days a week.
Yeah.
But that's within my $100 now. It's
Yeah.
not the three. So sometimes doing our tracking and discovering how much we are actually spending on these things makes us kind of relook at our priorities. Is it that important to me or not? And if it is, that's okay. But then sometimes we go, no, it's not.
Yeah, absolutely.
It's like the next one, veg out, meatless meal. I would rather go no veggies and just meat. But what that is about, though, it's not really about vegging out. It's about making choices on what we're going to buy. We all have things we enjoy eating. We all have treats or certain things. And again, very, very normal, but it's being realistic or realizing the cost behind that. So, I mean, I love a great steak, but I'm not paying $22 for one steak, right? So when it goes on sale and I can get myself a nice little tenderloin at a reasonable price, I get a treat. That's me. So, but that's what that is. It's making those kinds of choices of how important is it to me? Does it become more of an occasion on a treat because it's expensive? I think we all know when it comes to groceries, some weeks, even vegetables are ridiculously expensive, but we wait a week or two, no one's buying them, and now they go on sale and they're dirt cheap. So it's knowing the patterns.
Yeah, and knowing what sort of regular costs are. I'm going to throw my husband under the bus here because he was a member and had more money than he needed for a long time before we had a family. When I would send him grocery shopping, one time he came home with a $5 cucumber. And I looked at the grocery bill and I was like, $5 for a cucumber. And he's like, is that not the normal price? Like, you put cucumber on the list, so I just bought it. Right?
Yeah.
Whereas for me, I'm like, if it's over $1.50, I'm not buying it, and I adjust. But that only works if you're sort of familiar, if you pay attention.
Yeah, there's knowing your prices, and that comes with doing it. And then there's exactly that of the choice of, well, I want cucumber, but right now it's $5. Now you need to make a choice. Do you still get cucumber or not? I'm with you. I would not.
Yeah. Maybe the steak, but not the cucumber.
Yeah. Cooking a big dish, weekends, weekdays, doesn't matter. Especially that is great for, when you have a large family or a larger family, you cook a big meal and it all makes sense. But if there's only two of you or single individuals, a lot of the things when you're doing your groceries is family packs are on sale. It's the big packages and so on. And often people think, well, okay, I'm not going to buy that because it's just me. But again, if you're making a little batch for you or you make a big pot of it, it's just as easy. So again, you just make large portions. There's not a whole lot you can't freeze. So you can make smaller portions for lunch. So now you've got a home cooked meal for lunch. You can make larger portions for dinner. You get home, don't feel like cooking. Well, instead of ordering out, now you pull something out of the freezer. 6 minutes later in the microwave, you've got a home cooked meal. So again, it saves you not only money, saves you time as well. So that's a great way. I've done that most of my life. I'm still doing it. Shopping with friends at discount markets, so looking at the Costco's of the world. Again, for a large family, that's what those stores are geared for. But when you're looking at, either just a couple, single individuals, again, you might like tuna, but when you get a case of it, that might be a bit much. But looking at our friend circle, there might be opportunity. Okay, well, I like tuna. My buddy likes tuna. We're both single. Let's buy a case, split it in two. Now you don't have too much of it. You both get the saving and you don't have storage issues. So looking at our own, circle of friends can sometimes make us all save money as well. They say to set a budget and stick to it. Well, first you got to do your tracking. You got to see what are you spending. Typically takes about 3 months to get a good average. So after you got 3 months worth of tracking, now you're starting to get an idea. So first you need to review your original number. Is that good? Or is that where you want to be? And then you need to continue to track to make sure that you stay within that number. They say bring a list, and the last one, definitely don't shop in an empty stomach. It is absolutely true. I have been guilty of that for years, and I realized it a couple years ago, where I would always go doing my shopping on Sunday morning, and I don't eat breakfast, so I'd be hungry, which is normal. And I would buy more food than I needed. I would end up throwing food out, and I, couldn't figure it out. Well, exactly. So because I was hungry. So for me, it's very important to bring a list. So I bring my list so I know what I need. So one, I don't forget anything. Two, if it's not on my list, then I know it's probably just because I'm hungry. So now I know that about myself. So I'm able to continue walking. So bringing that list can be very, very important. And that's something that as we continue on this, you're going to discover that a lot of our spending is about understanding ourselves. We all have triggers and things that gets us to spend money. And once we understand those things, then we're able to take control of it. And again, it always goes back to our budget, and that tracking will let us see that. And then we kind of make the connection or go, oh, that's how that goes. And absolutely. And for me, that was an awe moment. Absolutely. When I realized that, yeah, I'm overbuying because I'm hungry. And then I started making sure that I brought a list, and my grocery bill started going down to where it should have been. And I'm also throwing out less food because I wasn't overbuying. So for me, it worked. So again, it's finding a technique that works for you. Everyone's different. So it's finding that technique.
Yeah. One that's worked super well for our family is I do a lot of online grocery shopping because I can see what I've got in the fridge. So that's where I've cut down my food waste enormously. Paying the $3 pickup fee is completely canceled out by knowing exactly what I've got. So I'm not overbuying. And it keeps the hunger in the grocery store thing out of the way.
I mean, there's a lot of apps nowadays too that you can do your entire shopping list. They have them for the store. They have them where they price match everything, flyers to plan where you're going to go shopping. Again, great tools for a lot of people. And I've known a lot of people that work with those. Not my thing for me.
Mm-hmm.
I just, a lot of people, you do meal planning. So they kind of grab the apps or the flyers and you meal plan based on, I do my meal planning at the store. I go and I see what's on sale. And then it's like, okay, that's a good price. So this week, I guess I'm buying chicken. So now I can go back to the veggies and figure out my meal plan. So there's no wrong way to do it. It's again, what works for you.
Absolutely.
But the wrong idea is if, okay, I'm going to buy ground beef. I don't know what the price is. I go there and I'm buying it regardless of the price is where you can kind of rethink the situation. Because there's weeks where ground beef is unaffordable. It's ridiculous, right? So it's like, okay, well, I'm gonna have to change the meal plan for the week. Do you really need a car? So this one is really, when it comes to financing a vehicle, is probably one of the number one areas that I see people get themselves into trouble is when financing a vehicle. So when we don't have a budget, when we don't really know what kind of surplus we have in our budget, and things might be going well, but then we buy a car, then we got that payment, then we got the fuel expense, we got the insurance, we got the maintenance and repair and so on. And 6 months down the road, we're in financial hardship. And I have seen this many, many times in my career where I can often track it back to the purchase of a vehicle. And unfortunately, when we finance a car, that loan is tied to the vehicle, and pretty typical, we owe more than what it's worth. So we can't sell the car because no one's going to buy a car with a lien on it. So it's it's a big purchase, sometimes very expensive, and it's a big commitment because there's not a lot of options to get out of that commitment. So again, having a good budget before we make this kind of purchase becomes very important to make sure we don't get ourselves into trouble. We often hear about being mortgage poor. Well, a lot of people are car poor just as much. So it is very important. And the whole rolling loans into loans into loans is a very, very bad thing as well. Because now you got to realize that you're walking away with a brand new car worth, let's say, $40,000 with a $60,000 loan. Again, not a good thing. So got to be careful with those types of things. For someone that likes to change cars every 2-3 years, maybe for safety reasons, or that's just what they like to do, you're probably better off leasing at that point. There will be a lesser impact and less commitment financially as well. That would probably be the only time that leasing is a good thing. When you're looking to purchase a home, very similar. The big thing when it comes to home buying is making sure that you're going to be in that area for a period of time. Typically, it takes about 5 years to start kind of making a return on that investment. Yes, there's always exceptions to every rule, but the general rule is 5 years. So again, if there's a move coming up, you're unsure if you're going to be staying in the area or anything like that, now might not be the best time to look about buying unless you're looking to convert into a rental property afterwards or something. But again, now we're looking at a bigger plan. But for your average individual, you need to plan to be there for at least 5 years typically, just to make sure you start making a return onto that investment. So can you afford it? Car purchase, home purchase, any large purchase period that you need to finance. Again, the beauty of Google. There is tons of tools out there available. There's 2 here examples. But again, it's always a good idea to figure out the true cost before we make the purchase. So even if, let's say you're buying something on a credit card, $3,000 purchase, you don't have the money, great, we can finance it on the credit card. What's the plan to pay it back? How much is it going to cost you? So again, quick Google credit card payoff calculator. All right, I'm going to put a $3,000 purchase on my credit card at 19.99, which is standard rate. And I'm going to make $100 payment a month. And it'll tell you, oh, here's how long it's going to take you to pay it, how much interest it's going to cost you. You might relook at that purchase and say, maybe I'm not doing that purchase right now, or maybe you're okay with it. But again, it's knowing all of the information in advance, especially with cars. Again, they're always really good at playing with the insurance, the annual rate, and it's only 5%. Okay, yeah, but 5% over 8 years on a $50,000 car, what does that add up to? So again, you look at car loan calculator, put in the numbers and see what it truly means. And that sometimes helps us change our mind. Well, maybe I won't do it now, and I'm going to put X amount of money away now for the next 12 months, because that'll give me X on a down payment, and I'm okay with financing the rest. That to me is more reasonable. So again, it's using the tools that are available for us to calculate these types of things. So here's putting numbers to what we've been talking about. So an example, saving on food. We talked, for example, bringing lunch to work. So the average saving would be $5 a day that it saves you, because you still got to pay for that lunch you brought home. But that's 15 a week, 60 a month, 720 by the end of the year in savings. So if you bring lunch 5 days a week, that much more. Transportation, again, depending on where you live, but the cost of owning a car versus using public transit can definitely give you some savings. Cell phones, pay as you go versus a monthly plan. Again, depends on your need, depends on your use of the product. But if you are on a monthly plan, the key of a monthly plan is you should be paying the same thing every month. So if you're not paying the same thing every month, there's always additional charges, then that means you're not on the right plan for you. And then you need to find the right plan that'll cover your need, or you need to look at what those additional charges are, and then maybe look at changing your habits so you don't create those additional. So data is always a big one for a lot of people. So you go over on your data, and every time it's an extra $20 and so on. Well, you can pay the extra 20, or you can modify your plan to have more data, or you can decide, I like my plan, I like the price, and if I run out, I turn it off. And until next month. Again, paying more is not always the option. Sometimes we got to make those personal decisions of, I don't want to pay more, and I got to make this work for me. So again, it's looking at that information to figure out, what works best for you. Kind of links back to looking at our bills when we get them. What are those extra charges? It happens on occasion, sure. Maybe you had a out of country call this month, cost you a couple dollars, but that's, not typical. Well, you don't need a plan at that point. But if it's every month, now it might be worth looking into a plan. So those are the type of things that can definitely save you money in the long run. We often tend to go to the big dollar amounts to save, but a lot of times it's all the little things that add up that save us that much more money. So managing our cost of living, talking about needs and wants. And I've used the word need a few times already, which bring us into our latte factor. We all have a latte factor regardless of our income level. So it is exactly what we've been talking. It's our coffee, or Tim Hortons, or Starbucks. For some people, it's eating in restaurants, impulse buy, gadgets, collections, you name it. We all have something, right? We all have a little something that we take pleasure of. And there's absolutely nothing wrong with those things. But again, it's just simply understanding what we actually spend on those things, because sometimes that can then change the priority to us on how important these things really are. So for me, Timmy's was not $300 important, like I said. So it's figuring that out. And the only way to know that is by tracking your spending and knowing, and our priorities change along the way. What was a priority important to me 10 years ago and today changes. And that's, again, normal for everyone. So it's figuring out those things. Then we talk about questions to ask ourselves. The first one I love. We say, when does a want become a need? So I'm from a background in marketing, studied marketing and advertising originally. That's the biggest marketing lie. That's the first thing you learn in marketing. A want is a want, a need is a need. You cannot turn a want into a need. Okay, it's a lie. It's a marketing lie. But again, that's what we do as a society. So we look at advertising and such, we need everything. We're told that we need everything. But there's a lot of power in words. So if we look at the word need, the original definition of that word, when we need something, in theory, it's something we need to survive. That is the true definition of a need. I need food, I need shelter, I need some clothing, word some in there. So those are needs of life. We need utilities and so on. Everything else is a want. But again, with the way society is kind of progressing, we took the word want and we almost made it a bad word, where if someone says they want something, well, now they're greedy, they want things. Like, I only get needs. Well, yeah, well, you need everything, right? But again, there's nothing wrong with wants. But if we start using the words the way they were originally meant to be used in their true definition, it changes our mentality. So if I say, I need this laptop, then I can justify it, buy it, finance it, whatever. I need it. I'll find a way because I need it. Versus if I say I want it, yeah, I want it. Pretty nice laptop, do whatever with it. Can't afford it right now. So it's a little easier to walk away. Now maybe I can create a savings plan so I can get it because I want it. I just can't get it right now. So there's a lot of power in words. So getting into that habit of using the words the way they were meant to be used will actually impact your spending habits. So anytime you say, I need this, or someone in the family, says, I need that, then question, is it a need? Is it something you need to survive? No, if not, it's a want. Okay, so first of all, you don't need it, you want it, and it's okay that you want it. But now let's look at that as that want. How important is it? How big of a priority is it? And so on. So it's a really good habit. I know for years now, I've kind of made that change between need and want, and absolutely have had an impact. And I love annoying my friends with it. They'll say, oh, I need that. No, you mean you want it? Oh, same thing. No, it's not. But there really is a difference. And again, it's about knowing ourselves. So what motivates you to buy? Advertising, friends, trends, and style. It's understanding yourself to then be able to control it. So my great example on this one is I'm a comic book guy, and there's not a single comic book store in the world where I cannot find something to buy that's guaranteed. But over the years, I've been, trying to spend less on those things. But if I see a comic shop, I'll go in it. But what I'll typically do is leave my wallet in the car and lock it in there, because if I don't have my wallet, I can't buy anything. For me, that's good enough to stop me. I'm too lazy to go back to the car, get the wallet, go back in and buy something. I know why I left it in the car. But again, it's finding those triggers for you, that what gets you to spend money. And once you identify those, great. Now you know, what are you going to do about it? Now, I've had people come in, oh, I've got problems with online shopping. I spend too much. Okay, you already know the problem. So what are you going to do about it? So again, the tracking helps us. 2 is, okay, well, if you find you overspend online, stop browsing. If you need something, go buy what you wanted and get off, but don't browse. Turn off your notifications for items that have been recently posted, because again, they're that temptation. So again, you need to take control of those things. And I just call it protecting ourselves from ourselves. Because once we know what gets us to spend money, then we need to protect ourselves to go, oh, I can't go there because I know that's going to make me spend. So I'm going to walk around instead, right? Does the urge to buy die the next day, or do your purchases make you happier? So that's the old shopping therapy, which is always great to joke about. But for some people, it absolutely is a challenge, right? You're having a bad day or something happened. So, you decide to go to your favorite store because it always makes you happy. The problem, it's not going to the store that makes you happy, it's the buying. So then you buy something, you go back home either that evening or the next day, you're like, I shouldn't have spent that money. That was bad. So now you feel bad again. Well, I feel bad, so I'm going to go back to my favorite store and browse because that makes me feel better. And now you're buying again. And like I say, we often laugh about it, but for some people, it absolutely is true. So when we can identify that in ourselves, now we need to take control of it. Well, I'm having a bad day. What else could I do? Maybe I'll still go to the store, but I'm not bringing money, credit card, debit card, nothing. So I can't buy, to see if I still get some sort of satisfaction or just find something else. So again, it's identifying those things within us. What needs are now collecting dust? All those things we needed that we bought that we've never used. Again, in this day and age, the nice thing is you can sell just about anything. So again, Kijiji, Facebook, Marketplace, those types of things. If you got things sitting around that you haven't touched for over a year, odds are you might never use it. Might as well try to sell it, get a little bit of money back. So great way to do that. And then the last one is the truest one of them all, is what can I learn to live without? It's all about choices. And so again, our budget kind of dictates how much more we can get. But again, if we have certain goals, it's normal. Human nature, we want it all. That's okay. We can admit to it, but we can't afford it all. And that's also part of the reality. So then it comes down to individual choices of what is your priority? What do you want your money to do for you? And how are you going to get there? So what am I willing to give up to get something that is more important to me? And that's a very personal question, but that's the question that each one of us need to ask ourselves on a fairly regular basis of what's my priority? What do I want? What's more important? And, what do I possibly have to give up to get that? And it's kind of that fair trade-off. So something we need to think about once in a while. Reducing impulse buying. So again, impulse buying is a big one for a lot of people. Stores promote impulse buying. They put certain things in certain place on purpose for that. So an impulse buy is anything that, let's say you're out grocery shopping or you're in a store, you see something, ooh, it's pretty, I want to buy it, you buy it. Impulse buy. It was not planned. Doesn't matter what it is. If it wasn't planned, it's an impulse buy. And we often spend a lot more than we realize doing that kind of purchasing. Paying cash is one of the techniques to help reduce the impulse buy. If we use credit, again, not bringing the cards or reducing those limits are definitely ways to help reduce that. The typical justification for a lot of impulse buy is it's on sale. Well, I get it that it's on sale, but even if it's 75% off, you're still spending 25% of something you were not planning on purchasing. So it's still an extra expense. So the big thing for impulse buy, especially when we're looking at, material items, not so much a chocolate bar at the checkout, but again, even that can add up. It's giving yourself time to think about it, sleep on it, go home. 90% of people, if you go home, are not willing to go back to make that purchase. Well, if you're not willing to go back to make that purchase, you didn't want it that bad. You wanted it because you were there. Now, the next day, if you're still thinking about that item, you say, yeah, you know what, I really want this, you go back and you buy it. That's not an impulse buy anymore. Because now you've thought about it, you figured it out, you're actually willing to go back to the store to get it. It's not an impulse buy. You've thought it out. Okay, perfect. So again, it's giving you a little bit of time. We're really good. Instant gratification is kind of where today's world is, right? We want everything now. So that's part of that impulse buy. But if sometimes we get a chance to think about it a little bit more, it's like, yeah, it's nice, but I don't really need it. I want it, but I don't need it. So we're easier to walk away at that point. So give yourself that chance. Last one, probably one of the most important one here, it's baby steps. Human nature, we don't like change. That is normal of most people. Most people don't like change. We're set in our ways, we've got our habits, and that's okay. But again, when we want to do change, we don't want to try to change too much too quickly. That tends to be discouraging to most people. We feel like we can't do anything, can't spend my own money, and then we give up and just go back to the way we were. So work one area at a time. If you do your budgeting, now you identify an area that, okay, maybe I want to do some changes here, maybe limit that spending. Get used to that, work on it, see the results. Oh yeah, that's working. I'm not spending as much as I used to. And then the change becomes the norm. Okay, where else can I do that now? Because if we try to do too much too quickly, like I say, for most people, we would just find it discouraging and give up. So don't try to change the world in a day. Give yourself time. Get adjusted to those changes. And then once the change is the norm, now it's easier to look at more things. And it's also more encouraging because, hey, it worked here. I see that I'm spending less money. Where else can I do this? Because I really want this trip, or I really want this car, or I really want to buy a house. So it's, again, kind of brings it all together for you. So we are at the question part. So I will put my contact information on the screen. So you can also contact me directly for any additional questions, informations, or if you want help to work on a budget or anything like that, or trying to reduce debt or anything like that. Again, we're always happy to assist. I cover the Toronto area for the financial counseling. Again, it's confidential service. It's just between us. We don't report to anyone, absolutely free as well. So more than happy to assist with anyone. So I will open the floor to any questions on material.
All right, Martin, I'm just gonna turn off our recording to keep that part private, and then we'll have that available on our YouTube channel, and then we'll open up questions.